Did you put your money in fixed deposits when the interest rates were rising significantly in 2022? Well, you might be thinking what to do after RBI Governor's speech today. The 6-member Monetary Policy Committee of the Reserve Bank of India unanimously decided to keep the repo rate unchanged at 6.5% on June 8.
The MPC decided unanimously to keep the policy repo rate unchanged at 6.5%.
Hello and welcome. I am Pallavi Sharma and you are watching Money Wise with ET Now. Interest rates have been significantly rising in 2022 given the RBI's hike in repo rate by 2.5% in just 10 months. But this pause by RBI, where it has kept the repo rate unchanged, has raised the apprehension of reversal in the rate hike cycle. So you might now be wondering, will the interest rate be falling for some time, or what should you be doing with your fixed deposits? Now let's figure this out in this video. The State Bank of India was offering the highest rate of 5.4% on its FD with tenure ranging from 5 years to 10 years till April 2022. Now it is offering 7.1% on long-term FDs. So it means that FD rates were yet to rise in tune to the repo rate hikes because the rates by banks have only been up by 1.7% versus 2.5% because of the withdrawal of 2000 rupee notes, decline in economic growth, subsiding inflation in India and much more. RBI is forced to pause the repo rate. Now I know what you are thinking, will FD rates hike anytime soon? Now the RBI's primary motive was to keep the retail inflation at low levels, and the rate hike was also because of the rising inflation and also due to the supply chain disruption caused by Russia-Ukraine war. Now retail inflation was at its peak in April last year, which made RBI to hike repo rates. After the significant hikes, RBI is now comfortable in pausing the rate hike cycle, and withdrawal of the accommodation stance lowers the possibility of any rate hike in the near future. Now crude oil prices have come down to $75 per barrel. WPI inflation has fallen to negative territory. 10-year G-Sec yield has also fallen to 6.9% on June 7 this year. Now these factors show that there will not be any rate hike in the near future. It's very unlikely. But will you see a fall in interest rates, and if yes, then when? Well, many economies are struggling to grow. Unless demand in these economies go up, inflation will be at high levels. To revive growth, many central banks may reduce interest rates. If there is a sign of inflation subsiding, RBI might also reduce interest rates. As per a report by ICICI Direct, RBI has indicated that it will not raise interest rates further for now. The market has reacted to the rate hike by lowering yields as the anticipation is of a possible rate reduction by the year end. So, well, as per experts, interest rate reduction would start by the end of 2023 or the beginning of 2024. So now what should you do? Well, going by most macroeconomic indicators, you might not see a significant hike in FD rates in the near future. As per experts, from retail investors' standpoint, this is an excellent time to lock in your funds in FDs because interest rates might be close to their peaks right now. Bond markets have already discounted rate cuts, and 10 years G-Secs have also fallen by 50 basis points since September 2022. Experts say that it is the best time to reinvest and lock in your investments in FDs if you have surplus or your FD is maturing right now. Now, they have also said that short-term FD rates will likely fall first as banks were slow in raising the long-term FD rates. They will not hurry to reduce these first. So, well, this is what the experts are suggesting. They say it is the right time to lock in your FDs for a long-term period. But you know what to do. check with your financial advisor and take a call based on your investments. And don't forget to subscribe to ET Now's YouTube channel.
If you like this video, then like, share and subscribe to ET Now.